capital is not what makes you successful. Of course, it seems like, right? If I have money, everything is solved, right? And I always say more money, more problem. When you look at some of the most iconic companies, Amazon, Google, Facebook, they were resource constrained. Capital is great, but it's never what creates innovation. Innovation always happens when there is constraint, because constraint breeds focus. Moving money is a solved problem. Like UPI does it for free. How can you make money moving money when it's already solved?
Digital consumers want delightful experiences. Fast responses make your customer interactions a happy journey. Signzy helps you get more customers with advanced digital fraud check that scales. Making digital banking also as safe, secure, and compliant as traditional banks. Using artificial intelligence to bring human-like fraud detection to digital processes. Which also makes customers happy.
Hey folks, welcome back to yet another edition of the Product Folks Fintech podcast called Cash Code. Today we have with us Nitya Sharma, who's the founder and CEO of Simpl. Nitya, welcome to this podcast.
Thanks for having me, Swaz.
Awesome. Nitya has had a phenomenal run. Spent over a decade on the Wall Street, then came back to start Simpl, which is revolutionizing how you pay on the internet. They work with a ton of merchants and millions of customers, and making payments frictionless in a post-paid world. You're going to have an amazing time on this podcast and lots of interesting ideas coming through, jumping right in.
So 2015 is an interesting year when you guys started, and it was very early in India Fintech, in 2015. We also started around the same time, a couple of years back. And I know that, there were very few people who understood pay later, BNPL, a lot of these fintech things back then. Given your background, you worked in Wall Street, you worked in structured credit products, right? I wanted to understand, like, from there, how did you get the idea of starting up a pay later company in India? What's the connection? How does your background help you to do that? And, if you could tell the entire backstory.
As you said, I used to live in New York before starting Simpl. And so my story is moved to US to go to school, worked on Wall Street for almost 10 years. So I wanted to become an entrepreneur. And my thought was I'll start a hedge fund. But I was taking some time off. And in taking that time off, I was spending a lot of time in India for the first time in 10 years with my parents. And one thing led to another. I got rejected for a credit card. And that's when it kind of hit me what happened. And I started getting curious about what a credit card is. And when I double-clicked, I learned three things, which essentially made me start Simpl. The first was very few people in India have a credit card. Even today, only 40 million unique people have a credit card compared to 1 billion people who have a bank account and access to UPI. Right? Second, credit card is a very North American, British, and Australian phenomena. Nowhere in the world credit cards are so popular as they are in the United States and UK and Australia. So I realized most people actually don't use a credit card. I used to use one, but I realized most people just don't. And then I also realized that this thing that we call the credit card that is sitting in your pocket right now was invented in the 1950s and 60s. And almost nothing about it has changed since then. And over time, the whole product has become very predatory. It is about making a lot of money by having consumers revolve. It's about making a lot of money by charging very high rates from merchants. So I thought in a place like India, where credit cards don't exist, but today's technology does, e-commerce does, mobile does, Aadhaar does, the India stack does, can you reimagine the whole thing? And to me, that was a very exciting thing to work on. Although, honestly, when I started, I had no idea how to even get it done, right? Because it's a complex business. But to me, it just felt like this could change the world. And my other option was start a hedge fund, which would hardly change the world. So yeah, I just jumped right into it.
Just quick follow up on that. Between affordability and convenience, what was your thought back then, like when you started?
Again, when I used to use a credit card, so I've had a credit card in the US, and I had an Amex card. And so my version of a credit card, what credit card meant to me, was about something that I use, which is convenient to use. So my Amex card was very convenient to use, one-click checkout and so on. It was safe to use, especially on the internet, because if something goes wrong, I can call Amex and they'll take care of it. Right? And of course, it gives you a lot of rewards, right? So for me, it was all about a credit card is about convenience, safety, and rewards. And so when I started Simpl, that was what we focused on. And especially in India, what I actually noticed, especially in e-commerce, was we have e-commerce that is relatively emerging in India. It's very new industry, at least in 2015 it was. We don't know what one-click checkout is. And once you've used it, you can't go back, right? There was no one-click checkout. And 60 to 70% people used to use cash on delivery for e-commerce. By the way, that number is still the same. Right? So I kind of felt that Indian e-commerce is suffering from a user experience and trust problem. And so yes, so when we started Simpl, the idea was, how do you reimagine this whole thing, focused on user experience and checkout, like one click and so on, and trust in the post-purchase, wherein if you don't get delivery, what happens? If something doesn't work out, what happens? And so on. So yeah, the whole idea of Simpl is really, the wedge of Simpl is user experience and trust. And around that, we're building a lot of other things.
Very interesting. I think, Nitya, where you started was, you not getting access to maybe a credit card. And today you're trying to solve this across the entire commerce layer. When you were starting to think about the first version of how this would look, and like you said, even today, the credit card penetration is really, really low, but the need for credit has always existed, right? What was that first version that you envisioned that you went out into the market with on your product suite?
Yeah. The first version, and honestly, we have not changed versions. We just made our sort of first version better, is we asked this question. Human beings have been using a Khata since humanity. So for the last 5,000 years around the world. And we still use a Khata in stores we trust, like our Kirana store, our milkman, our newspaper wala, anywhere we have a relationship with, we typically run a Khata. And it still happens in today's world, right? So one of the things I asked the question was, Khata is a friendly, trust-building product that has survived 5,000 years. Mm-hmm. How can you reimagine the Khata for the internet, right? So that this product is not about credit, or like credit is a tool to deliver trust and user experience to the customer, right? So that was the original version of Simpl, and that is still Simpl. Like, we have not done many different things. Right. Naturally, the hard thing in a Khata for the internet is everything you have to build to make it happen. So it's one of those things, right? Google Maps is Google Maps, but to make it happen, it's extremely complex. It's extremely complex technology. Mm-hmm. It's extremely complex machine learning and data science. It's extremely complex process of building a network out. You have to go merchant by merchant, convince them to use a Khata for the internet. I always say the first 100 retailers are almost impossible to have, because why would you be the first mover to some new thing? And the next 1,000 are hard, but then it becomes easier, and so on, right? So yeah, it's been a while, but we've been doing one thing and just making it better and better, because we believe the natural way to buy on the internet is not paying first and get it satisfied later. Mm-hmm. The natural way to buy on the internet is buy, satisfy, and pay. Yeah. And this is not a consumer, we believe, only in India needs. Everybody in the world wants it. Like, who wants to pay first and hope they get satisfied? I think no one. So we're building a product with a very fundamental insight around human behavior. Yeah. And how does that transcend to the internet?
Yeah. You mentioned the first 100 are always super hard. Do you remember how did you convince the first one? Do you remember who it was, and how did
Yeah,
you convince them?
of course. Our first merchant was Fasos,
Oh, nice, okay.
right? And Jadeep, who's their CEO,
Yeah.
uh, is a phenomenal guy.
Yeah.
And the team, they are the first ones who sort of like saw what we are doing
Got it.
and sort of like took this risk. It was like, okay, let's go.
Did you have an existing relationship? Did you know him from before, or was this?
No, it was through, just like meeting them, and they had, Jadeep was there, Somdeep, who's their CTO, Revant Bhate,
Yeah.
who was their head of growth
Yeah.
and sales and so on. They just like said, yeah, we are. And then remember, this is 2016.
Yeah.
They were the biggest food delivery company in the country,
Okay.
right? Swiggy was, right behind them.
Uh-huh.
Zomato was becoming a food delivery company and so on. So Fasos was the biggest food company in India, and yeah, they just bet on us, and since then we started off.
Do you remember what problem that they were facing that you went in ahead? I'm very curious to understand what the pitch was, because it is super hard to convince that first client, right? Because you're still building the product. Someone has to take a bet on you,
Yeah.
and they did. But what was that core problem that they were facing, that they were like, okay, hey, Simple's gonna maybe come and simplify something for us, maybe increase our revenues? What was that pitch like?
The core problem they were facing, and by the way, all retailers face today, and are therefore pitches somewhat similar. Every retailer has a Pareto. You have 20% of your customers that create 80% of your revenue, right? And yet, you give the same user experience to 100% people, which is this shitty user experience of this and that and click and OTP and this and failure and the whole 9 yards, right? So our pitch was, give the high trust user experience to your top 20% customers, right? And to us, the high trust user experience is buy with one click and pay after delivery, right? It's like magic, right? It's like boom, right? And like what our pitch was, we told our retailers at the time, they're like, look, our version of payments is, the way we define the payment experience is, the best payment experience is no experience. No one ever woke up in the morning to make a payment and go to Fastest to make a payment, or go to Amazon to make a payment, or go to Starbucks to make a payment. Payment has to happen, and therefore the best experience is zero. And if you think about it, Khata captures that. Khata means no payments. And that is different from credit, right? It's not about I don't have money. It's like that experience is not what I care about. I'm here to experience this thing, right? So when you think about most retailers, especially in some of these things around quick commerce and food delivery and even fashion, there is always a Pareto where your top 20% customers are very regular, right? They're buying things on a daily basis, right? Sometimes thrice a day, right? Can you have a differentiated checkout or not? And the answer is, obviously you should, and that's what Simpl is. Simpl is almost like you just leapfrog the checkout, right? There is no checkout, right? You press a button, you get it.
Yeah, that's true.
Right? So there is no, you do this and there is a wall and there are 5, 6 options, and you have to choose this option or that option, and then do an OTP, and then get it failed and so on. Simpl is, all of that is to a background.
Correct.
You buy, it gets aggregated into one bill, and you pay that bill at a convenient time.
Yeah, completely. I think frictionless. You're just removing the friction out of this one.
Yeah. So I think no discussion around pay later would be complete if we don't talk about the regulations and the sort of the challenges that this sector has been facing. Now, even though basically for the consumers it's a lot of convenience, and from a merchant perspective it's frictionless, easier checkouts for customers. You said the Pareto principle. Returning customers can actually transact much better. But even then, I wanted to know from you. We have a very progressive regulator, but how do you think regulator is looking at it, and how are regulations sort of being sort of looked at for this sector?
Yeah, I mean, as you said, I think we have a very progressive regulator, and as evident from the phenomenal infrastructure we have. Like, where is an infrastructure where money moves 24/7, real time for no cost? You have this AA account aggregator where you can get decentralized data and so on. And obviously, a policymaker and regulator has a very hard job to do, right? There are so many people in the country, and we have to make sure everybody is safe. Now, when you think about, just to frame BNPL first, and I think how the regulators are thinking about it, and when we talk to them, we try to talk through that. There are two types of, let's call it pay later, right? One is a pay later that is for convenience and safety. The what we are building, Khata, right? It's about not pay later, it's postpaid, right? I want to pay after delivery as opposed to, hey, I don't have money to buy my food, right? So that's one. And then of course there is pay later. Hey, I don't have money to buy my computer or a fridge or a washing machine, and I need money. Both are pay laters. But one is solving a convenience and a safety problem. The other is solving an affordability problem. Right? Naturally, that also means the ticket size for which these are used are different. For the one that is solving for convenience and trust are typically for your daily purchases. So typically the ticket sizes are small, right? But obviously for the affordability purchases is something that you purchase once in a while. It could be a fridge or a washing machine, but yes, it's large ticket size and so on. So that's one. One is small ticket size, the other is large ticket size, right? Serving very different purposes. Second is, one is pay later, where a regulated institution, an entity like a lender or a bank or NBFC, gives a line of credit through their books to the customer so that the customer can use somewhere. So that's one form of BNPL. The other form of BNPL is a retailer giving operational terms of payments to their customer, right? So if you think about it, cash on delivery is a version of terms of payment. So a retailer says, hey, I want to have your business, you prefer this, so I'll give you a way to pay after delivery with cash or UPI. So if you were to sort of like build a 4x4, there is BNPL that is for small ticket, focused on convenience and trust, BNPL for large ticket, focused on affordability, and the other side is BNPL that is given by a regulated institution on their balance sheet and so on as a line of credit to the customer. The other is a lender, a retailer giving you operational terms of payment, right? So that's how this thing. Yeah. And from what we see, regulator obviously understands the nuance. These are different things, right? A line of credit on an NBFC is a very different thing. It can pose systematic risk to the system and so on. Whereas operational terms of payment by retailer is a retailer's choice and so on. We also believe the regulator also thinks about things like this with a risk-based approach. Risk-based approach as in not all BNPL is the same. 10,000 is different from 10 lakh, right? And we have seen this approach in PIIs, prepaid instruments, PPIs, right? So if you think about it, if you have a prepaid wallet for under 10,000 rupees, it is light KYC, OTP, one click. If you want a wallet from 10,000 to 1 lakh, you have to do something else, right? And anything more than that is a bank account, right? And so like, you know, the amount of money and like what could happen is what is called the risk-based approach. And from what we understand, the regulator is thinking through that with a lot of nuance.
So you are seen as a technology company which is enabling convenience, small ticket size, and then you use this term, right? Merchant terms of payments. Correct. Right? That's the segment.
Exactly. Yeah. We are a technology company that does three things. One, enable online retailers to provide a Khata to their customers. Okay. Second, we also give them all the insights from the data and the network we have on who to give and how much of the Khata. And then we work with our retailers as their agent to collect on their behalf. So the customer does not have to pay for one transaction each. For all the transactions that they have done in a period of 15 days, you know, they just pay once in one bill. So that's how it works. And again, to your point, right? We believe that compared to a credit card, right? This product is extremely consumer friendly, right? And the reason is this: there is never an interest rate, right? Unlike credit cards where interest rate could be 36%, 42%, and so on, right? Here, a customer can never get into trouble. Second, here, there is no revolver, meaning if you are not paying your bill, you stop. You have to first pay the whole bill is when you can use it again, right? So it's never right, you can pay 10% of it and keep on using it and so on, right? So it's a perfect beginner product for consumers to learn how to budget, to how to be responsible with money. And that's our focus. That's how we're building Simpl.
In fact, it is also a product for people like me. I've been using Simpl for convenience because I can rack up all the bills on Zepto and then, you know, pay it in one shot. And the Ledgerize program actually helps on your end in terms of risk, I think.
Just to add one thing, if the delivery does not happen, you'll not have to pay.
Yeah.
Right? Oftentimes delivery happen, but like
Yeah.
people are the reason people use cash on delivery is at one time when something goes wrong, right? And then you turn to credit. So Simpl, really, one way to think about it is Simpl really turns cash on delivery into UPI payments. That's what Simpl is, right? You're just paying once, not each time.
Now, such a discussion would not be complete if we also don't talk about, there are a lot of challenges in this sector globally as well as in India. We saw Zest Money, had several issues and got closed down. What do you like in your mind? What are the challenges that the industry is facing, and how have you kept yourself, above that?
Look, I think to really appreciate the challenges, I think we have to step out and out of the industry itself and like really appreciate whenever innovation happens, new industries are created. It's never a easy, smooth ride. It's not like you start a company and go IPO, right? And when you look at the history of e-commerce, I mean, like thousands of companies were created, and finally we have an Amazon, right? So it's like almost like a Darwinian weeding, right? It's a Darwinian process, right? I mean, like some companies will do well, some company will not do well, companies will shut down, and nothing is good or bad here. It's a process, and it happens everywhere, right? Whether in India, US, e-commerce, fintech, BNPL, or whatever, right? So I mean, I don't know specifics of which companies did not work out, but yeah, I mean, like I think it's a non-trivial business to build, like anything else, right? E-commerce was non-trivial also back in the day. What you're doing is you're building a lot of technology. Like imagine you're replacing payments. So you're building something grounds up that was built over 56 years across multi-trillion-dollar market cap companies.
Yeah.
Right. So you're building, like, it's non-trivial. Like most likely you'll not be able to build it, right? I mean, that's like to build it is actually an anomaly. Second is you're doing this like whole data science and machine learning and like controlling fraud on the internet, right? Again, non-trivial, right? So these are the challenges, but these challenges have to be solved, right? And our goal is, and to your point, right, we don't do many things. Actually, we don't do any things. We just do one thing, right? We're building a Khata for the internet, but that Khata sounds easy. Like as I say, right, like things are simple when there is extremely complex things going on in the background. And so that's what you're building. It takes time. It takes a lot of courage. It takes a lot of, being able to weather the ups and downs of the industry, the sentiments, and so on. And the only thing that we believe keeps on going is that we believe in our unique insight, which is Khata will happen on the internet, and customers want trust on the internet, and retailers want to build trust. We believe there is a global, opportunity, and that's a secret. A lot of people don't agree with me, which I like, because secret is secret when not everybody is agreeing with you, right? But if you believe in it and you are right, then you can build a big company. But if you are not right, obviously, then you crash and burn too. But if you believe in it, then you can kind of go on, like despite all the ups and downs, and then also sort of like, you can say no to the other shiny things, because shiny things come, right? Since we started, there's been crypto and this and that, and you can very easily get distracted. Let me do something on crypto and build crypto inside Simpl and all that. I mean, it's really about really focusing on solving the hard problems, which also makes your company very durable. It's very hard to compete with Simpl at this point.
So that's something I can attest to as a outside in perspective, that over the last 10 years I have been watching Simpl grow, and it's basically the same concept or the same problem that you have been solving. And there were so many other products which came in, right? Credit line on prepaid cards and so on and so forth, but you never got deviated. So that focus, I think, for entrepreneurs who are listening to it is a very big learning, I think, for me.
Nitya, something that you mentioned, which I got onto, along with product innovation, right? First of all, tough product to build, didn't exist as much. Second, going up in an industry where you've also brought in some amount of, I think, business/financial innovation here as well, right? Because like you mentioned, money here was made by credit cards when someone didn't pay their bills on time, right? That's where they were making money. You came in to say, okay, hey, we're not going to do it that way. So if you can help us understand, okay, hey, where does the real opportunity here, like, one, you're democratizing it, you're helping a lot of people transition into this, you're bridging gaps, but where are the larger opportunities for Simpl to make money here, and where does the business model here lie?
I think that's a great question. And what happens with technology? Like I think what happens every 10, 15 years, there is always a platform shift, right? There's some new technology or a set of technology that comes together. Like for example, Uber, right? I mean, like there've been people who've been trying to build an Uber since '99, right? But for Uber to happen, you need the smartphone, which was not there in '99. You need GPS, you need internet on the phone and stuff, and have enough people who would have it, because you need to have the demand density and supply density. So whenever that happens, either a platform shift or two, three technologies come together, which you have not built, someone else did, you're able to fundamentally revolutionize a product, right? And almost always, the revolutionization is driven by a business model revolution, right? What is the business model? How do you deliver the service to the customer? How do you monetize and how do you make money, right? For example, Amazon, right? Amazon, a lot of people can think Amazon is a Walmart with a website. But the reality is Amazon is not a Walmart with a website. Amazon reimagined warehousing, logistics, and everything else, right? And customer support and payments and checkout and so on, right? And so as we think about it, that is the fundamental opportunity I think we are sitting on. As I said, in India, only 6% of consumer retail right now is on the internet. Only 6%. Now, if you compare that to similar nations like, let's say, Indonesia, that number is 28%. Brazil, this number is 19%. Europe is in 40s. China has already crossed 50%, which means 50% of consumer retail happens on the internet. So India is 6%. The question is why? And the answer is not we don't have income, because yes, we have lower per capita GDP. But what I'm saying is people are buying. They're just buying 6% on the internet. Right? So what we believe is again, Indian e-commerce is choked and bottlenecked by user experience and trust problem. Right? So that's our opportunity, right? Our whole product is about building user experience and trust, and a way for consumers to pay for things on the internet that is flexible, easy, and safe for them, right? From India, we believe this is a fundamental global opportunity. The question is, I mean, I always think like this. I hardly buy anything physically anymore. Like internet is so easy, it's cheap, it's fast, everything is there. The only thing I buy physically is experiential, right? Something I really want to experience, right? Something nice, fashionable clothes or something, right? Or something that I want to experience. But most things, I just who wants to go out in a car and park and like deal with that? It's just, so I believe, fast forward 10 years, all the experiential things, and who knows, metaverse will make experience on the internet to the next level. But assuming metaverse is not there, yeah, we'll go out to buy things, try things and stuff. But why are 70-80% transactions not happening on the internet? I just don't get it, right? And again, I think it's like, how do customers make user experience, taking into account all the elements of user experience, which is just not clicks and pixels. It's more about clicks, pixels, and what happens in the post-purchase and so on, so that so many people in the world start buying on the internet.
Very interesting. I think as more and more, and I think we're seeing that, right? Like with financial innovation, we have UPI as a technology that's fundamentally changing the way we're making payments. GDP per capita is increasing, smartphone penetration, internet penetration. I think all those factors are going in the right direction. And I think what you are doing is making that entire experience frictionless. I would love to go a little deeper. When you mentioned lots of other countries have had greater commerce penetration on the internet, right? People buying a lot more. Is it a matter of time till India gets there? Or are there other factors, right? If you could help us understand, what do you think is, why are we probably not getting there faster? If that is one way to put the question.
No, the answer is we are getting there faster.
Okay.
We just started late.
Got it.
Right? So like, I think that's a thing, right? I mean, leaving aside internet and per capita GDP, if you think about most technologies, whether it's India and most developed markets, are just leapfrogging, right? I mean, India moved to WhatsApp, and everybody has a WhatsApp, and and so on. And like developed markets are now sort of moving to WhatsApp. Like I remember 5 years ago, sometimes my friends in US did not even have their WhatsApp. And I was like, what are you talking about? Like, how do I text you? How can you not have WhatsApp? Like, what are you doing? Like now everybody has WhatsApp, right? I mean, like coming to e-commerce, just to give you a statistic, e-commerce in the US started in '95. By the way, by 95, eBay was already big. eBay was a thing, right? Amazon just started. And then by 27, 28, e-commerce was big, right? PayPal was there and so on. Look at the journey, right? It took US 20 years to get to 20% penetration in e-commerce compared to consumer retail. 20 years, right? And for that to happen, they needed to build PayPal first. Well, they needed to build all the e-commerce companies first, and then all the logistics and warehousing and robotics and everything they had to build. And then they have to build great payments, right? PayPal created, Amazon had to build one-click checkout, and these companies sort of like moved e-commerce from X% to something else, and then eventually it was 20%, right? And now it's hovering at I think 25, 26%. But it took, what is it, 95 to 25, 30 years.
Yeah.
If you look at Indian e-commerce, it started sometime around 2010, right? And really became serious around 2013, 14, right? With Flipkart and Amazon becoming big and so on, and consumers started buying online, right? So if you think about it, India is only 10 years in that journey. So I don't have that data or the chart, but if I were to plot the kind of like the acceleration, India is probably moving faster. But there are problems, right? 50% of e-commerce transactions in India, 50 or 60, still happen on cash.
Exactly.
So now imagine this, right? Here is the market ready to accelerate, but cash is a drag, obviously, right? Returns happen, people, all that stuff. And yeah, I mean, like, for it to happen, I mean, one of the things I always say is great companies don't take market share, they create new markets, right? So the way we think about our job at Simpl and in the industry is we're not taking part of the payment pie. We are saying we are making the pie bigger by building better user experience than exists, much better trust and safety features, so that the 6% will become 12%, and we want to dominate that pie.
How much cash on delivery has gone down in the last 10, 15 years?
Yeah, it's an interesting question. So just to give you a statistic, right? People used to say, like when I started Simpl, like 15 and 16, cash on delivery is 70%. Now people say it's 55, 60%. But the reality is when they say 50, 55%, they're talking about large e-commerce companies. But when you go to like D2C brands, right? So when you think about e-commerce is not Amazon. E-commerce is so many things. There is food delivery, there is grocery, there is Amazon and Flipkart and Myntra, and then there is D2C brands, and all these things that happen because there is technology for anybody to come and sell on the internet. So if you talk about D2C brands now, 70, 80, 90% of e-commerce is on cash sometimes.
Oh, really?
And the reason is trust. Like we have over time come to trust Amazon. And maybe we'll trust Amazon even more in 10 years, right? So what about D2C brands, right? And so on, right? So yeah, I mean, like, so and again, right? The way large e-commerce platforms become big is they basically corner the user experience and trust in the customer, right? So they own the user experience trust. One way to think about Simpl is democratizing user experience and trust, and therefore anybody can sell on the internet when they use Simpl. When a customer is buying using Simpl, they never have to worry about trust and of course user experience.
Nitya, as you mentioned, I think lots of product innovation, lots of business innovation coming in. One thing very curious is every credit product has to manage risk efficiently. And in your case, since this is technology first, I'm sure there's a lot of machine learning and AI going behind the scenes. But given you're also dealing with the commerce layer, I'm sure there have been a lot of fun stories on both sides of the table, right? Anything that you'd like to share with us on a decade-long journey of managing risk, but at the same time making it frictionless?
Yeah, and that's always the really hard problem to solve. How do you make something frictionless also safe?
Yeah.
And you can't separate the two, right? They have to be together, right? The way I would frame the question is that inherently any business on the internet takes risk, because two people who don't know each other and haven't seen each other are transacting. And this happens in eBay, it happens in Airbnb, it happens in every single such interaction. It happens when you're sitting in someone's car in Uber also, right? And therefore, managing that risk of something wrong not happening is a fundamental property of the network of platform that is making two people connect, right? So it's not incidental, it's like the most fundamental, and yet it's in the background, right? And I always say we are actually essentially a data science company, a machine learning company, and an AI company. And the approach we have taken, Suhas, is there are a lot of ways to manage this type of risk. One thing that we believe is that internet, and when you think about internet first products, there are internet first, data first, mobile first ways to solve the same problem that a legacy industry might have solved using different tools, because those new tools are not available, right? I'll give you an example. eBay. Random people buy random things from random people around the world. Anything can go wrong, right? And yet it works for the most part. And eBay does not use any legacy ways to enforce these rules or laws, because it's cross country. Like, you can't even involve the law, right? And yet things work. And the reason it works is because the platform creates fundamental tools like reputation systems and data science and blocking illegal activities and so on, so that everybody's safe for the most part. Airbnb is a good example of that, right? Random people are staying in random people's houses around the world. What can go wrong? A lot. And yet it works, right? So at Simpl, this is how we have thought. We have said, what are the native to e-commerce on mobile? And of course, everything else that we have in India, whether it's AA, UPI, the India stack, how can we stitch it all together to create a native to e-commerce on the internet or on the mobile safe experience, right, for everyone, and give them the frictionless thing while preventing fraudsters? So yeah, it takes a lot of it's a lot of product innovation. So it's like I always like to think about this as an iterative loop. It's not like you build something and you're done. You build something and it has to get better with time. Right? And then that's a fundamental again, right? Every internet, if you think about one big differentiator of an internet first service versus non-internet first service is that internet first service typically gets better with time, right? Google Maps is a good example. 2010, I remember using Google Maps in around that time when I first got my iPhone in 2007 or 8. It was really bad, right? Really bad, to the point that when I moved to India, I was like, it will never work in India, because I always imagined that the reason the maps work is because there's a map probably, and there are roads, and in India we don't have clearly marked roads, and so how can you even make it work, right? And yet it works, and it's crazy accurate. I can go from here to Whitefield with the time it will tell me right now, right? Despite so many things. And the reason is it has all the data from somebody going ahead of me and behind me, and all the things that they've learned over the last 10 years, just getting way better with time. And so yeah, we have built our entire architecture, the product, where the product just get better with time. It is getting safer and easier for customers to use, while it just gets better with preventing fraud and abuse and people misusing it. Because one of the things about building a great user experience, and by the way, in e-commerce, there is an example of it, right? Returns. One of the things is every retailer wants to have no questions asked return, but the moment you give it, you'll have abuse. How do you solve that problem? Right? So these are the problems that are, and yet you have to solve that, because the customer who wants to buy wants that. And like one of the things I always say is, and I think in India, I think a lot of work has to be done on the trust aspect, but a lot of user experience on e-commerce are designed to prevent fraudsters. If you think about it, it's not designed what will be the perfect for, imagine there is no fraud, right? At Simpl, we imagine the world like we like, okay, what is a trust first experience? Like, imagine you can trust this person. What would you do? That means you can let them buy with one click. You can let them post pay. You trust that they will actually pay. And if there is a problem in returns, refund, delivery, and stuff, it'll be taken care of. Right. So that's how it's sort of like that's the core problem to be solved, and it's just like working very hard. We have a phenomenal team of data scientists. But yeah, I'm very proud to say we're very good. We're probably one of the best in the world for this. But we're not best because we just did something. We've been doing it for many years now. That's true. And like focused, like we're not changing what we do and so on.
I think you said it right, the balance between convenience and security, right? It's the hardest to strike that balance. But then also another question about consumer fintech models itself, right? Like, there have been a lot of issues, a lot of questions asked around cost of customer acquisition, LTV, how does it work out in terms of unit economics? I wanted to ask you the same question. Like, when you look at it as a sustainable, profitable business in the long term, how are you working towards it today in terms of, let's say, working on unit economics, efficiency, and other things?
Yeah. I mean, in the end, in any product, whether it's technology product or not, eventually has to have a business, and business means profit, free cash flow, right? And one of the things that really, kills businesses is when the cost of customer acquisition is very high, and the retention is low, right? Because you don't get the payback, right? So when we started Simpl, there was, if you think about it, in payment type of space, there is no small like it's always been dominated by large companies like Amazon Pay and like Phone Pay and Walmart and Flipkart and Paytm and so on. And so when we started, we never had the capital as a weapon to go and acquire customers by giving cashback and so on, right? So we always focused on the product, right? And one of the things is the reason products have high CAC is almost always because they have low NPS. When you have a great product, and then that's where when entrepreneurs build product and we build product at Simpl, and my one big advice is you can't build product for everyone, at least in the beginning, right? Sometimes in India, we say, hey, we want to build a product for this tier 2 and tier 3 and the 300 million people and 500 million people and all of that. Like if you're building for 500 million people, you're basically not building for anyone, right? So it's important to like focus on a cohort of consumers that is sort of big enough, but like you really know what they want and you deliver that experience like no one else, right? And when that happens, they love it. And if they love it, they obviously retain. When they retain, they tell their friends. And when they tell their friends, they also trust this new product and they go and use it. And your cost of customer acquisition naturally drops. Right? And when you solve that problem, and although it's a non-trivial problem, but I always think that I think entrepreneurs need to really focus, regardless of the capital they may or may not have raised, to really get their growth engine right in a way where a CAC is low and payback is short, right? Till you figure that out, it's probably not a good idea to grow very, very fast.
And just to double tap on it for the finance guys, especially who are listening to it, that how do you actually make money in Simpl? So you said consumer is not charged anything. So is it sort of merchant side subvention? And
yes, retailers pay us a fee. And the reason they pay us is we move 3 metrics for online retailers. We increase conversions by almost 40%, because one click, it's easy, safe, and so on. It increases retention, cohort retention, by 30%. Right? And what it does is overall increases the spend of the customer over a quarter or a year. Right? So basically, Simpl is a revenue driver. It's a growth driver. So a lot of our customers think about Simpl not as payments, actually, right? We are more of a growth tool, marketing tool. How do you grow using Simpl is the problem we solve.
And the customers then pay you subscription, or is there some?
The consumer doesn't pay us anything.
The merchants.
No, the merchants actually pay you as a subscription fee, or
no? It's a percentage of TPV, total payment volume, like this one.
Awesome. Nitya, changing gears, would love to jam on talent, on ecosystems, and a little bit on the future of fintech. Of course, for building the products that you've been building, and for the time that you spent across both ecosystem, I'm very curious to understand how was your experience building companies out of India when you spent enough time there? Is there anything that you suggest the Indian ecosystem can learn from that? Of your experience back in New York and in Assam. And the other way around, what did you find really exciting, very interesting about the ecosystem here that you think we are a little ahead of what you've seen globally?
Yeah. To answer your second question, the exciting thing about India is that almost everything that is there in the West today, and this is true for internet type things and physical things, will be built here. But it will be built using new technologies, right? So there is a real opportunity to leapfrog stuff and like really do great stuff, right? Whether it's in communication or e-commerce or payments or any such thing. That's the exciting part. The second exciting part is that the infrastructure that entrepreneurs here are building on are infrastructure that was recently created, right? Mobile, India Stack, e-commerce. All of that is already built by some other people, right? And a lot of times are by our own government, right? So you're like in the US, right? For example, there is a company called Plaid, right? It's like multi-billion company, great company, and people use this thing to connect bank accounts. India, the Plaid is a Aadhaar account aggregator. It's like a public utility. Anybody can build on it. It's almost free. I mean, there is nothing like that, right? So the government has provided the fundamental, let's call it building blocks, right? And obviously, what the opportunity now is how do you use these building blocks to uniquely solve customer problems, and then build a business model around that problem, not a business model that people used to have in the past, right? New business model, so that you can make a lot of money, right? So that's exciting part. It's like truly you can think about revolutionizing what used to exist. Like it's always like, okay, credit card in the US or Europe can be rebuilt here, but it will not be the same, right? E-commerce can be rebuilt. Like imagine quick commerce is a good example, right? I mean, like the fundamental insight of Jeff Bezos was people want three things: availability, speed, and cost. In India, we're getting all three in 10 minutes. In 10 minutes, once you get it, you can't go back to 30 minutes. It'll look like I cannot go back to 30 minutes, right? And then honestly, people will pay for it. We believe that, right? You can't go back 30 minutes. 30 minutes, like not everybody will pay for it, whatever, but people will pay for it, right? Once you get used to these things, either they will figure out a business model to make it work or charge the customer. So that's exciting part, right? So much is happening, and the Amazon, like people are saying this, and I don't know what will happen in the future, but yeah, the Amazon of India could look more like a Blinkit, Zepto, Instamart than Amazon, right? Because of which Amazon is now trying to do that, right? And because the important thing is to do the 2-day delivery or 1-day delivery, Amazon could not have built on the back of a Walmart type thing, right? They had to reimagine their own infrastructure, warehousing. But to do 10-minute delivery, you can't have the Amazon warehouse, right? I mean, like they have to rebuild everything, right? It's a new company. You can't, and if you try to piggyback on your previous things, you basically screw up. And a lot of people have tried that and it doesn't work, because to do 10 delivery, you need a grocery store right near my house and the whole 9 yards, right? So it's not just like an app that does something, it's everything in the background. The difference is, one of the interesting things about the US ecosystem is, and it's not US, it's very particularly Silicon Valley, right? This 20-mile type radius. And that is very different from the rest of the US, right? So we sometimes say India, US. There is a very unique place in the world called San Francisco, Silicon Valley. That's a 20-mile radius. And they have, what is special about that is, there is a, I don't know, let's say 40-year history of building groundbreaking products, right? New things, from silicon chips to software, to internet, to mobile, and now AI. All the AI is happening in Silicon Valley. It's not happening in all the other places. And the reason is that the density of talent, capital providers, and entrepreneurs who have massive visions, like, hey, we will build something where you can sit and like your AI agent will do all the work for you. Like they're building a CEO where the CEO will not have to do the job. Like it's a crazy vision, right? So I think when you think about a small area like that, where there are people who are extremely ambitious, they don't think in countries or cities, they think about world. And obviously now we are thinking about the Mars and like the space, right? I mean, like there is no bound to ambition naturally, right? And Silicon Valley, just because of successes they've had and we've had in Silicon Valley, which we all benefit from, obviously, it's not like only Americans are benefiting, it's everybody benefits from it, makes people more and more bold, right? People used to build silicon chips and school, and software, and they used to build billion-dollar companies that was cool. And then internet came, and 10 billion was like, okay company, and like 100, and now trillion-dollar companies, and now companies going to Mars, and all the stuff that is happening. That is happening because of really three things. One, really bold people with crazy visions, which that sounds crazy, but that's how the world gets pushed. But it's backed by equally talented workforce who've done it before in some ways, and capital providers who are ready to go. Let's go. And that's why it's a very interesting place, right? Right. And I think it's important to put that into context, because it's easy to compare India with US and stuff, and it is what it is. But India has phenomenal entrepreneurs, great investors now. But the reality of India is, let's call it, this type of technology type companies are only 10-year-old phenomena. Like we did not have a technology industry in Bangalore or Mumbai or Delhi that goes back to 1970s, right? So the benefit is for Silicon Valley is there is a 40-50 years of experience, memories, learnings, ambition, capital, therefore, which just makes people push the envelope to an extent that most other countries and cities just like find it hard to do. But what I want to, however, say is what, and yet I am building in India, right? And obviously, and the reason I'm building in India is because of the reasons I said. I strongly believe just like India has leapfrogged other things, we can actually leapfrog this. Let's say we have a 10-year experience of tech companies. In the next 10 years, we could actually leapfrog US of what they learned in the last 30 years. And a lot of times China has shown that, right? Because you're fundamentally building on new technologies. The speed of innovation will be fast. Speed of success and failure will be faster, right? And so experience is never number of years. You can pack more experience in 10 years just because of the speed of things that are moving, right? Sure. And that makes India very, very exciting.
On the future of fintech, I've always been in that, and since this series is talking to fintech entrepreneurs, we love brainstorming with them on what they think. Earlier it was 2025, now we've pushed to 2030. Where are the next 6 years of Indian innovation? Yes, we're moving in the right direction, but if you were to put out a bold vision out there, what does 2030 for Indian fintech look like on a global map?
Yeah, look, first of all, right, I think it's we all sometimes underestimate the past, and but this is how I'll frame it, right? First of all, they say things happen slowly and then suddenly, right? I believe we are there. So think about this. In 2015, let's say 16, most people did not have a way to pay, whether it's online or someone, right? Today, every single person has a way to pay. Every single person, billion people. Billion people don't have toilets or clean water, but they have UPI. I don't think Silicon Valley has seen this. Right? So, and of course, that was driven by the government to quite a large extent, and then of course a lot of companies. But yeah, I mean, I think where a lot of interesting things are already happening, so many entrepreneurs are working is, connecting all these dots of UPI and India Stack, Aadhaar, to truly really build the user experience around wealth management or lending or payments or insurance and so on. And my bold vision is, just like a billion people from 50 million people now have payments, the billion people now will have access to the same financial services that rich people do. Interesting. Right? And then that's the exciting thing about internet and internet is it's a great equalizer. Amazon for a billionaire and for a middle class, regardless of the world, is the same Amazon. Netflix for a billionaire and a middle class person is exactly the same. Uber, like name it, right? Google is the same, right? ChatGPT is the same, and Perplexity is the same. It's same product that is just like the same for extremely rich people. Like I'm talking about billionaires, right? To middle class or lower middle class or whatever person, right? Why can't that not happen in financial services, right? And today is not the case, right? Billionaires have access to much more sophisticated wealth management, for example, but that's a technology problem that can be solved, right? Billionaires have access to ways to invest in asset classes that most of us don't, right? I mean, that's a solvable problem, right? So if you ask me in the next 10 years, that is the opportunity, I think, in India and definitely around the world, right? How do you just level the play field of everybody have the same access, the same privilege that we are now used to? Like no one blinks an eye. Like there is no entrepreneur who's building an Amazon for billionaires.
Yeah, that's interesting. That's true. I mean, do you want to move into the last section? Should we start off?
Yeah, just one more question before that. For a endeavor like this, obviously you need equity capital to build the technology team, go to the markets, the consumer, fintech, and acquire merchants. But at the same time, it involves capital because it's a pay later service, so you need debt as well. So can you just explain what has been I know you're very quiet about it, you generally don't talk about it, but whatever you can share about what kind of fundraising you have done to reach this point?
First of all, one of the important things that I believe and have come to believe is that capital is not what makes you successful. And I always give this example, and of course, it seems like, right, if I have money, everything is solved, right? And I always say, more money, more problem. When you look at some of the most iconic companies, like we think they are the best companies, whether it's Amazon, Google, Facebook, and so on, they were resource constrained. Amazon, I think, raised $20-30 million in went public, right? And they're still there, right? Google also did not raise much money, and whatever they raised, they never spent. And capital is great, but it's never what creates innovation. Innovation always happens when there is constraints, because constraints breeds focus. That's number one, right? The way we fund our businesses, we have equity, we raise equity capital, and we raise debt capital. Debt capital is used to fund the receivables of the customer, and equity is for our operations, right? And what I'm happy to tell you is by next quarter, we'll be profitable.
Oh, nice.
Right? A lot of people in India say that payments, you can't make money. Well, you have to reimagine the business model, right? You have to, moving money is a solved problem, right? You can't, UPI does it for free. Right? How can you make money moving money when it's already solved?
Just for the paucity of time, maybe time to jump into our last segment, but this is my favorite, where we go into understanding a little bit on the personal side, and also a fun little rapid fire that we have for you, Nitya.
All right, let's go.
Ready? Okay, awesome. I picked out one of your old tweets that I really, really loved. I think this was where you said that 90% of success is just showing up, and showing up on days when you don't feel like it, what makes the difference, right? Do you have any anecdote that comes to your mind where you distinctly remember where you showed up for something where you didn't want to? And is there any anecdote that comes to your head when you tweeted this?
An entrepreneur's journey, of whether it's me or anyone else, it's a lot of ups and downs, and the highs are higher than the biggest highs, and the lows are the lowest, and you can imagine, and yet you have to show up, because there is only one guarantee of failure, which is you just don't show up, right? So I don't know if there is one example, but there are millions. Because there are a lot of days when and times where it's really hard, and yet you have to go and show up, and not just show up, you need to move forward. I remember this some story, I think I read, or some article about Tiger Woods. Tiger Woods was still young in 2002 or something, not really the Tiger Woods we know of, and I think he first beat Phil Mickelson in one of the PGA Tours, right, for the first time ever, and Phil Mickelson was the number one legend, right? And next day at 5 a.m, he was in the gym. Right? And most people obviously will go to a party and have dinner with family or whatever, right? And the thing is, the one thing that is not often talked about success happens when somebody does the same thing persistently, resiliently over an extremely long period of time.
Correct.
Extremely long period of time.
Yeah.
Right? It takes decades, and it requires resilience, because in that decade you will go through crazy ups and then crazy downs, whether you're a sports person or an entrepreneur or anyone like that, right? And the number one thing is that you need to be there, whether you're winning or losing, right? And trust me, most people, it's hard to stay the course. It's very, very hard. That's the hardest thing.
So this is rapid fire. You should answer in few words. Okay. If you could swap your role with another CEO, who would that be?
Look, I don't know if I'll do a good job. So obviously, SpaceX.
Nitya, given your past experience on the Wall Street and working at a hedge fund, I'm sure you would have had a chance to interact with a ton of billionaires. Is there any unique insight on how they operate that you'd like to share with us millennials?
One of the things about billionaires is sometimes it's very hard to know who's a billionaire, because a lot of $100 million guys pretend to be billionaires, and they have the flashy cars and they flashy things. Sure. So I don't know how many of the people I know are real billionaires, whatever, but definitely met a lot of successful people with a lot of wealth. There are a few things, right? One is they're extremely goal focused, right? Meaning almost nothing else matters. as long as they're achieving their goal, right? They're very passionate about what they do. It might be a very mundane thing, like very boring thing, but they just, for some reason, extremely passionate about something that you would think is, why are you passionate about this, right? And I would say last is that, and this is like an example. I don't know them, like Elon Musk and Peter Thiel personally, but I've seen that thing, right? I don't know if you know the history of PayPal, but Elon Musk and Peter Thiel were extremely, they did not get along, right? They were fighting each other all the time, and like it was board coups, like it was ugly. And yet Peter Thiel is the one person who backed Elon Musk when he was really struggling with, I think, SpaceX or Tesla or both, right? And so, really, I think the reason is, and I think that's important for success, whether you're a billionaire or not, or any amount of success, is being able to, obviously, we all think about ego. Egos are important, right? Because ego makes you focused, right? It makes you have a sense of identity and so on. But the wrong type of ego also distracts you. You basically become very self-serving, right? So imagine, had Elon Musk and Peter Thiel not collaborated on Tesla and just because they don't like each other, we would not have space in Tesla. What a shame, right? For the world, and of course for them, because now they are what they are because of those companies, right? So how do you kind of like, and therefore that's a goal focus, right? Like, okay, I don't like you or not, like we can move past these things, right? I mean, these are all silly, stupid things that people like have their own versions of who likes whom. But being able to, that's noise, right? Distill it out and just still be focused. Whether you want to make money or be successful or be a billionaire or be a sports person or, I don't know, bum on the couch and watch Netflix all day, like know what you're doing and make sure you're just driving towards it all the time.
Two quick ones from my side. One, another fintech company that you really like and respect.
Square. I guess it's called Block now.
What other business would you start if it was not Simpl?
When I was in college, I studied mechanical engineering. And the reason I studied mechanical engineering was because I remember I went to college in 98 to 2002. And sort of at that time, internet was the big thing. And of course, I was interested in internet also. I had a computer and so on. And all my friends were doing the internet thing, right? And or like were very keen on software. For some reason, I like the idea of these robotics, robots, right? Like the robots could do so many things, right? I guess in 2002, there was, as I was graduating, there was limited things that you could even explore, or at least I did not know, right? Today, it's like where the world is moving is there is just so much more happening on the intersection of software, AI, and physical things.
True.
So, I think I'll start a company in the space of area of like, I don't know, self-driving cars situation, or even climate energy, where it's just not some software. It's like, hardware, software, everything comes together to solve basically a $10 trillion problem. Like it's a huge problem right now.
Yeah. Nitya, I'll just pull up another tweet of yours on in 2023 where you tweeted about work-life balance is shit. Instead, start living life in seasons, right? Listen to your body. Work when you're working, let no one phase you, and play when you're playing, let it fulfill you. Would love to understand how did this shape up? What are your thoughts on how do you even manage? What does your 24 hours really look like?
Look, I think one of my views is that society, general society, whether it's our families and school and institutions and religions, always propagate this theory of taking the middle path, which is like having a balance, right? And I believe balance by default means you're not choosing. You're just saying, I want a little bit of that, a little bit of this, a little bit of that, or whatever, and you basically don't even know what you want, right? And that's a short way to be mediocre. Right. So, and of course, that's fine. Right? I mean, like, we don't need everyone to be whatever, right? And like, we also sometimes use these words even like with a negative connotation. I don't mean that. What I'm saying is that if you want to be truly successful, then you have to choose what you want to do. And then whatever you're choosing has to be deeply integrated in life, right? It's not work or life. Work and life is the same thing. Right. Right? It's a classic industrial era, I think. I would say managerial classification, like, oh, there's work, I go from 9 to 5, and I probably don't like it, and then I come home. and then that's my playtime. But even then, I'm just sitting at and watching Netflix or just doing things without being purposeful about it, right? So that's what I meant. Just a lot of people who want left work-life balance. Almost, I've never met a person who wants work-life balance and they got it because it doesn't exist. It's like silly to even think like that happens, right? Because you're always like, oh, I want this, I want that, right? So it's like really about having life, knowing what you want, having purpose, and spending time there, right? And when you think about it, real happiness, like a lot of times, even I, right? I mean, like there are weekends I, do things without much like being conscious about it. Like, for example, hang out with my family and watch Netflix all day. I mean, that's such a waste of, like, yes, it just seems fine all that time, but I just feel like, oh shit, the whole Sunday is gone, right? But what I really enjoy is when there is some activity, right? When with my family, my wife, like we sit and do things or go out, right? And my wife will laugh at it when she hears it, but because sometimes after Friday we are so tired, we just sit on the couch also. But yeah, I mean, like happiness comes and like you feel satisfied when you sort of like engage in something. And the more difficult it is, actually, it's more interesting.
Yeah, for sure.
Yeah.
For sure. Awesome. I think maybe just one question to end this section. Nitya, lots of time people equate success with also like financial freedom, right? I would love to understand, how do you think of this? Is this like a number that you have in mind, or again, just by the interaction that you've had, what does financial freedom mean to you, and what would you suggest our community, the way everyone thinks about wealth, everyone thinks about money, and I think that the number one goal that's going behind them, and actually, okay, hey, how do I get to that, whatever number they have, right? I would love to get your thoughts on how do you think about this.
There's something I read, I think, very long time back. Said something to the fact that the three biggest addictions in life are carbs, cocaine, and monthly salary.
Yeah.
Right? And I think the definition of financial freedom is you're not addicted to the monthly salary. Not that it's bad, and a lot of money is better, right? But just addiction to monthly salary is, or being able to be off it, or have less of it, or whatever, I think is financial freedom. Now, it doesn't come because you have more money or less money. It's a combination of, like I'll always say, like it's a company, like a startup, right? You have a burn rate. You can choose your burn rate. You can be a billionaire and burn all your money. Like there are people who actually spend millions of dollars and become broke also, right? Or you can be making less money, a lot less money, and and your burn rate is less. You are controlling your spending and so on, right? But yeah, I mean, I guess there is some element to having some basic things. You obviously should not be worried about food, or things for your kid, education, and so on, or have a house that is reasonably comfortable, or having some basic necessities of life, which when you think about it, you don't need too much money for that, right? So I think financial freedom is to be able to get off salary if you need to.
Yeah, no, for sure. I think that's a great way to put it.
But it's the mindset. It's not necessarily money. It's not, there is no number, right, in my opinion. Of course, there is a number where you can't live, but after that, it could be millions of dollars. It could be 10,000 rupees also, whatever.
Yeah, it comes down to how you balance it. But yeah, I think that's a great way to put it. Nitya, I wish we could go on forever. I think there's lots and lots to chat about. And hopefully we'll do a part 2. But thank you so much for your time today.
Thank you.
Absolutely amazing. And yes, looking forward to the news, like you mentioned. Profitability is around the corner and lots of innovation. Thank you for making commerce frictionless for all of us, and really looking forward to this.
Sounds good.
Thanks.
Yeah. Thank you.